Hello, I'm David Cheston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of some stunning economic growth in Ireland. But first, the US Fed's important Beige Book survey is out today, and that shows the American economy is expanding at a modest pace. In Europe, Ireland has stunned the international community by reporting a real GDP growth of, wait for it, 26.3% from 2014 to 2015. Much of this growth was because they have been a beneficiary of US tax inversion deals. Although employment has not changed significantly, the Irish government says, the newly recovered wealth means public expenditure cuts are now off the agenda. Apparently, tax advantage deals can pay off big for a small country. However, the Irish Central Bank has raised concerns over what has been dubbed Leprechaun economics. China reported a slightly better trade balance overnight. Exports were low in US dollar terms, down 4.8% in about market expectations, but imports fell 8.4% and much more than the 6% expected. Lower oil imports were down 22% year on year and were a big factor. But oil wasn't the only item their imports to drop. In fact, cargo volumes through China's ports grew at the slowest pace in 7 years in the first half of 2016, according to an industry survey overnight. And that showed the country's trade slump hitting its biggest gateways. China port container volumes rose just 2.5% in the January to June period from a year ago, and the ports of Shanghai and Shenzhen, China's two biggest sites for imports and exports, both saw container traffic decline 1%. And the Central Bank of Malaysia unexpectedly cut interest rates late yesterday, their first reduction in 7 years. The 25 basis point cut takes their overnight policy rate to 3% and follows other countries in the Asia-Pacific region such as Indonesia, India and Singapore, who have each recently eased monetary policy settings to help defend economic growth. And in Japan, their government has cut its growth forecast sharply amid speculation it may soon unveil a new stimulus package to support an economy which is seen as ailing due to the very strong currency. GDP is now expected to grow by just 0.9% this fiscal year, down from a January estimate of 1.7%. And back in New York, US Treasury 10-year yield has slipped slightly today and is now at 1.47%. Overnight, there was a raft of European bond auctions, and Germany sold 10-year debt at a negative yield, becoming the first Eurozone nation to do so and setting a further milestone in the relentless fall of government bond yields across the world. The US benchmark oil price is down as well, shedding more than $2, now just under $45 a barrel, and the Brent benchmark is just over $46 a barrel. The gold price is up, now at $1,337 an ounce. And the New Zealand dollar starts today slightly softer at 72.8 US cents, 95.7 Aussie cents, and at 65.6 euro cents. The TWI is at 76.4. I'm David Cheston. That was 90 at 9, brought to you by interest.co.nz.